Hey guys, this is Adam from Dodjit.com and this is your video briefing for Monday the 23rd of November 2009. Now basically what we're going to do in this video is going to be pretty short because nothing really happened last week. We received this one day up, you can see this massive bounce. We even formed a higher high, which was a good thing for the markets, but the rest of the week wasn't that good and we really didn't receive a follow through, and basically we just retraced, and especially on Thursday we just dropped lower. And now basically if you look carefully at the chart, we are trading around a type of support, resistance here, support around this area, and we're now coming down to support 1080. Now what I want to do also, I just want to show you that momentum is starting to decrease, and we saw this on a few of the reports. We've been stating this. If you look carefully, look at the angle of the trend. We received this massive uptrend that we were climbing higher. The angle now of the trend is starting to decrease. You can see by this upper trend line, we touched this upper trend line which acted as resistance, and now our trend has seemed to have changed its angle slightly from this massive rally to now a more moderate angle. So you can see that. So basically what we're looking at the moment is like this. Economic data still isn't that brilliant. There are certain sectors that are showing improving data, but the overall economy, especially when you look towards unemployment, not that good. What I still think is we are going to receive this one leg higher. I think it's going to be a little bit volatile going higher. We stated this also in the previous video, and this could coincide with an end of year rally. Now we got to take precaution around these levels, and for those of you that are option traders or know how to protect your portfolio, you might want to do this through maybe options, maybe buying a put option, just in case the market doesn't go according to plan and the market doesn't really rally. So just to sum it all up, at the moment the markets are starting to show signs that they want to start to range a little bit. We still believe that the markets are going to head higher one more time again, but you've got to take precaution. Like we stated in previous videos, those of you that have managed to grab some nice profits along the way should think about closing those positions, maybe just keeping a small portion of that just in case this market does rally one leg higher. The next chart that I flipped over to is the euro against the US dollar. Let's just get that in there like that so you can see up here the euro against the US dollar. Now, all of these charts we've stated quite a few times. We just want to go over them, and the reason for that is because last week of trading we didn't receive that much movement, so our assumptions have still remained the same. Looking at the chart, we've got our upper trend line like this going higher. We've got our secondary trend line coming down like that. We can see that we are now trading around that secondary trend line. Now what I want to just do is I just want to show you guys that if we zoom out even more, we can see that this is a type of resistance level roughly around this area around here. So we've got resistance around 1.5038. And what we are looking for a break above that level. If we do continue higher, so then our target will be roughly around 1.5283. That could be a nice trade, especially coming towards the end of year. And we've mentioned this also on the reports, that the euro is normally favoured towards the end of the year. We sometimes receive a nice rally on the euro. So a break above 1.5038 I think should do the trick. Moving on to the dollar against the Japanese yen, this should also be quite interesting. We've retraced lower. We've got these secondary trends that are absolutely amazing, that we can use their trend lines for guidance. You can see one up, one down, one going up, another one coming down. We are now approaching double support once, two times, even the third time around this area. So this is a nice trade. It could be setting up, especially we can use the trend lines as a signal for our breakout. The next and final chart that I just want to show you guys, like I told you already, we're gonna make this video a little bit shorter than usual, is the New Zealand dollar against the US dollar. Now you can all see that we've been really rallying higher. It's been this massive, really great trend going higher. And we've now broken our trend line, or basically we're trading on our trend line. There's a little bit of undecisiveness around this area. If you look carefully, I'm going to just erase this trend line for a second. If you look carefully, we are now starting to form a type of symmetrical triangle, which these patterns normally indicate towards a continuation of the previous trend. So if we're looking at the New Zealand dollar, we can see that the previous trend was an uptrend. We are now forming this triangular pattern. Again, what we're going to just use is the trend lines for a break and see how this plays out. I'm going to just zoom out for a second and see that if we do break out, obviously we have got room to go higher. You want to take into consideration that we've got resistance around here which acted as prior support. So take that into consideration. If we do break that higher, obviously, so then we are going to be looking for our target of 0.7780. So you've got all the charts. Obviously, take precaution. We are at high levels at the moment. You don't want to be fully exposed to this market at the moment. Let's see how it plays out. We'll keep you posted. My name is Adam from Dodjit.com.